everyone's attention as it was occurring that we were currently in mid-cycle waiting to break what I deemed the most important trend line in crypto. Been looking for that and saying since May, things are unclear, since May 14th, when we saw the failure of this particular pattern. We'll talk about that. I think Bitcoin is often talked about or thought about from many extraordinary vantage points, but very seldom from the vantage point of an expert trader or of an expert investor. And I think that brings an important perspective. Let's take a look at that. And by the way, I do want to come in at the end and focus in what's happening over here as we believe that the mid-cycle low is in. Now that price has broken out of the trend line that occurs from this mid-cycle consolidation and is breaking out. If that indeed is the lowest price point that we see and price does not have a failure, if that low is in, then this is the most accurate model that we're lining up. But let's take a look first, beginning with Bitcoin. And then this is when we first, by the way, brought this everyone's attention as the low was occurring, as it was being bought in, talking about the price action that comes out of that. You could see price, acting well within that intended range. And I call it the hive mind, the CTM hive mind, right? Rather than a model. It's my analysis, my technical analysis, my understanding of the markets. It's what I share each and every day. And then the community is able to absorb that in, take it in. I said from the very beginning, the reason I was creating this channel, this group, was to share my knowledge, 20 years experience in the markets with everyone, help lift them up, improve their skill sets, and then become this positive feedback loop where we all just continue to sharpen, iron sharpens iron. Ian, Ted, everyone else in CTM, it's an honor to be working alongside all of you. We're starting off here with the mid-cycle adjustment. This is where we are. Now, this is not where we started. We started lining these things up from the halving event as we made that halving and crossed that halving. Fully positioned in ahead of the halving, front running the halving. And then we saw this cycle, Now, originally, the observation I made lining these up was that, we are having diminishing returns. So I went ahead and calculated the last cycle high to that cycle high. And then from that cycle high to that cycle high. And I saw that it was diminishing. It also led me then to do all my planning so that if Bitcoin price hit $140,000 during this 2020 halving 4-year cycle, that it was mission accomplished. I set out to achieve every goal that I wanted to ahead of time. I did that by front running the 4-year cycle. I don't see how it's possible to do otherwise. We'll see if I get there or not, but I'm not going to stop there. I'm not going to stop at $160,000. I'm going to try to time this to get out as close as I can towards the top. There's a high degree of certainty in my mind once that this trend line was broke mid-cycle, that the low is in, that the mid-cycle low is in. I have a nice trade on, continuing off all of the investments I bid, why it matters, and how it gets out. By the way, I'm not selling at $90,000 with a break of $90,000. I'm looking to sell this at the top. Now, it might be significantly higher. It might actually be a lot higher than $160,000. We'll take a look at why I say that, what I'm looking at, how I'm going to continue to manage that trade, and most importantly, push it. The next thing you do is you line these up from when price makes that prior all-time high break from the last cycle. We found out that by, lining it up then, we continue to get that accuracy. But before I do, I just wanted to make the observation that, coming out from the halving and then running and then that bull market starting, the observation that I made was that, what we're seeing is this current price, it's an average of the volatility of the previous 2 cycles. It's actually not underperforming the previous cycle, and it's not outperforming that 2012 cycle. It's whether it's to the upside, whether it's to the downside, or even in the length of sideways consolidation, it's an average of the previous 2 cycles up into this point. Now, if people lining things up, perhaps from the halving, or from the perhaps the cycle bottom, they'll say, well, it's underperforming 2016 a little bit. I agree with you. That's for sure underperforming. Now the question is where this ends at the end. So what we do after the mid-cycle low, you go to the prior all-time high. I said, okay, when I line these up from the prior all-time high, and I said, all right, that's helpful. As price makes that all-time high, price takes that 19,400. I start lining these cycles up, and I get a little bit of clarity coming into what we then perceived, or I perceived, what was going to be this mid-cycle shakeout. You could see in the prior 2 cycles that we had this shakeout where price started consolidating. This is happening in 2013, right? Now, you could also see that occurring over here in 2017, 2016 bull market cycle. Both of those ended with a little capitulation, but really the signal, the trigger that we worked out is when price breaks that trend line, and then boom. By the way, from that low to that high is that 150 days. You see it occurring in this cycle, previous cycle, low to that low 150 days. Does that mean it's going to happen again? No, I don't know that. But what I do see it happening, I was expecting to happen, and by the way, I thought happened over here, was that mid-cycle shakeout when we had a 30% drawdown. We had a 30% drawdown. Price started going upwards. We're lining this up here on CTM from this point over here, all 3 cycles. And then price comes back down, and that's no longer a V. And we're over here on May 14th, they're able to say, you know what, something's not right, get neutral. Right? Now, I'm not selling my spot Bitcoin. I don't sell during the Bitcoin bull market. That's not the point. Bringing this forward. So the whole time here, we're waiting. Things are unclear. I let everyone know really quick. Listen, until price breaks what I deem the most important trend line in crypto, things will remain unclear. Once price breaks that most important trend line in crypto, it should be a matter of time before we make the new all-time high, and then this bull market continues running. We were able to play it out with precision, getting out of the mid-cycle shakeout over here, and then ultimately lining up from July the 20th. When the close, on the daily closing, that mid-cycle low was put in, and you go ahead and you continue lining these things up now from not the prior all-time high, but the mid-cycle low. We had like a high degree of confidence, or I had a high degree of confidence that mid-cycle low was in once price broke the most important trend line in crypto. And you could see that the price action out of that low, it does closely resemble the price action in the previous cycles out of that mid-cycle low on the break of the most important trend line in crypto. You could see it happening then in the previous cycle, and it's happening again now, right? Now, that's not to say that price is going to continue in that trajectory and that we're going to see like something like wave 1, wave 2, and into liftoff and into that cycle peak. That if that lines up, you know that we got it. We're watching it and we're going to see it. Could price, rise up faster? Of course. Could price wind up underperforming, coming in there and perhaps, even seeing that peak later in 2022 that people are talking about? Yes, I will know by price action within this period whether that's happening or not. And I think that's a fantastic way to be able to manage your risk and your positions, having that type of accuracy, right? How else do we do it? There's so many different ways. There's so many more nuances. How do I share them with you? Where do I begin? We're gonna listen. This model will continue to be adjusted. This is what we deem liftoff over here in this area. And as price go ahead and if that happens again in 2021, and you see, roughly in November, price putting in, a pullback and then taking out that high. Once it takes out that high, we'll be lining these up, not from the mid-cycle low. We'll be lining these up from what we deem liftoff. Both these times, it took 35 days into that cycle peak. Being a price action specialist, I understand what I would be looking for, how to exit here at cycle peak on top, whether it's 1, 2, 3, 4, 1, 2, 3, 4. We're going to be able to do it and do the same thing for the coming bear market. Whether people are looking to be a little bit more aggressive in selling perhaps altcoins, as Bitcoin is the rising tide that lifts all boats, is also going to sink them. In Bitcoin's bear market, alts are going to get destroyed. It's going to happen again. Approximately 6 months after the halving is when the first alt season begins. There are 2 alt seasons in each Bitcoin 4-year cycle. The second one started as Bitcoin, the rising tide that lifts all boats, breaks out of that mid-cycle, what I deem the mid-cycle shakeout, right? And it was a shakeout. A lot of people capitulated over here, and this was different, and each cycle is different. When I say this is different, this was a rounding double wave top that took place over. You could see that this was a spike double wave that hop. Yeah, we got things like a pi cycle cross indicator and things like that, and hindsight is always great, but what you're looking to do is envision all this before it plays out and position it. That's what how you're looking, or that's what I've done. That's what I continue to do. By the way, when I talk about that position I put on over here, I mean, it's a masterclass in itself. Anyone who's interested in learning more, I would love to share, as I love to learn from everyone. taking this further. There are other similarities within these 4-year cycles. When you look at Bitcoin, you have to start here, looking at the full history of Bitcoin. Beginning, it's important to highlight the fact that Bitcoin is coded monetary policy. It's not people meeting behind closed doors to make decisions about what happens in the future with Bitcoin and its monetary policy. We know that there are only going to be 21 million in existence. That's defended by consensus. It's in everyone, market participants' interest to keep the Bitcoin supply at 21 million. Every 4 years, there's a halving of the miners' reward that the miners receive for confirming and defending the network. And you can see those events. I'm going to put them in here. The first one occurred in 2012. This is the first 4-year cycle. And then you see that concluded in 2016 with the next halving, which then went on for another 4 years, concluded in 2020 with the following halving. I don't want you to focus your eyes, or your attention rather, on the 2012 cycle, the 2016 cycle, the mid-cycle low. We'll focus on this current cycle that is deemed mid-cycle. A cycle has never peaked out this quickly before since the halving event. That would be very unusual. We have lots of data, whether it's on-chain, technical, showing that right now that Bitcoin is extremely bullish. We'll get to that later, but first I want to begin with people when they look at this chart are able to make, the observation that there are these peaks here in Bitcoin where Bitcoin tops out. The next clearest thing it's easy to see, after Bitcoin tops out, it goes into this bear market, which puts in a cycle low, moving towards that next halving event. You could see after that top price was picked in, you could see then there was a bear market, and then you could see that from then on in, price was front running that halving event, and then you could see that occurring again, a bear market. You could see then the price then front running that next halving event. We'll focus over here on this one. I just want to take a moment to highlight this area over here. This area that when we were viewing it from a different perspective, that's this chart over here, you could see that, price was what? It was consolidating for a long time, mid-cycle over here, before making that massive move off. Okay? So that was it a double wave? We like to refer to it as a double wave occurring. Did we have a double wave this cycle? Here's that 2012 first wave and then the second wave. Was this also a first wave, but instead of peaking with some type of parabolic move to the upside, was a 3-month exhaustion wave, top leading into that into that bear market? Or was this just the mid-cycle pullback? The whole time bringing everyone's awareness to where Bitcoin was in the cycle. They're able to go ahead and set and manage their risk the best accordingly. Let's take a look at it. Let's move back to the overview here. Another observation that you can make when you look at this is that, from where price puts in that high right before the low, it puts in this long bear market, and you can see that occurring again in the next cycle after that, putting in that long bull market. And both of those bear markets, they coincided with this capitulation event to the downside. You could see that capitulation event to the downside. Now, if you're looking at playing and front running the 4-year cycle on Bitcoin, the next thing that you're looking at is not waiting for the halving event and then trying to buy Bitcoin at the halving event and then trying to, distribute that towards the top. And there's many different charts that we're able to view to give, long-term holders that type of vantage point of seeing what that looks like. And we're nowhere close currently, right? We're mid-cycle. And not only mid-cycle, you could see that, we're not in accumulation zone and we're not in a take profit zone, nor have we been anywhere close this cycle. Really what you want to focus in on, let's try and do it like this. Let me try to change the color here for you, and I'll make that just a green. And you can see that that's the bull market phase that you want to be positioning in and focusing on. I could talk about how I've done that, and that's going to add tremendous insight to better navigate Bitcoin and its 4-year cycle. So then you could also see it from the bottom over here, into that top again. And then you could also see it occurring from the bottom again there. This is where you position it. By the way, right, because of understanding Bitcoin and its price behavior around that 4-year cycle, I was able, after that capitulation, it's taking that technical analysis ability. I've been trading and focused in the markets for over 20 years. And that's a lot of experience. Experience is invaluable. And after seeing and understanding the 4-year cycle, I didn't understand it right away, by the way. I was, started buying into Bitcoin in 2016, heavily in 2017 as Bitcoin was breaking $850. And then, I just held Bitcoin. And that means I held it through an 85% bear market. At this point, I did not have the understanding that I do now of Bitcoin's price behavior around its 4-year cycle. What was causing it, right? It's that coded monetary supply, along with human psychology. And you could see it playing out once again. Is that going to, in the future, perhaps lessen? We're trying to focus, and you could see that we get hyper-focused, as I'm going to talk about what's going on right over here in this area right now, how that we have been preparing, and the way that we were able to go ahead and lead into this dip. I'm going to get into this area with you. All right, first let's focus. Let's continue focus on how this plays out. So right now, currently deeming we're mid-cycle. We're going to together focus in on that and see what that means. So these bear markets, by the way, they share some characteristics. For example, both of them were descending triangles. For example, both of them lasted 12 months and 2 weeks. Bitcoin shares certain characteristics that have occurred in the past, and it doesn't mean that it's going to occur in the future. But not to pay attention to them, I think that at this point would put you in a distinct disadvantage. Why I say that is because having the ability then to understand Bitcoin's 4-year cycle over here, late December 2019, 18, and I tweet out that Bitcoin just bottomed, right? You have to buy when there's fear, blood in the street, and there was blood in the street at that time. Everyone thinking that Bitcoin was perhaps even going, or some people thinking that Bitcoin was going as low as perhaps even $1,500. The fear was extraordinary. And then just 3 weeks later, I was able to call the move. I said within 2 months, Bitcoin's going to be trading above $8,400. That sounds insane to someone. Looking at an asset for the last 13 months has been trading down, just under pressure, and then say for no apparent reason, to be able to call this impulse. This is where the front running of the cycle begins. This is where the front running of the halving event begins, and you take your position on Bitcoin. Coming into the halving event, it's when I publicly began my YouTube channel, working with everyone that I could find, and it was at October until November of 2019, and we began taking positions into Bitcoin. We were able to not only foresee the coming dollar crisis, positioning ahead of it through in FX ahead of time, selling S&Ps, and then ultimately at the bottom over here, this is like an anomaly that occurred on Bitcoin because of the dollar liquidity crisis. The greatest risk to Bitcoin at all times, from my perspective, is the current financial system and its implosion, right? If you're betting on the central banksters being able to keep the music playing for as long as possible, and that if there's any type of liquidity crisis that they will come and act quickly and massively, then you're betting on Bitcoin. If you understand Bitcoin, then you're betting on the future of Bitcoin. This is the first entry. Over here at the halving, as the halving event occurs, we together, we began making that position. Oh, I was talking about what occurred over here during this anomaly, by the way. This was the BitMEX, the largest Bitcoin-only exchange at the time. You could see that it went into this liquidation feedback loop, and price just kept falling and falling and falling. It bottomed out, actually, when they took BitMEX 1 offline. And you saw that maintenance message, and that's when price immediately began recurring. I didn't have personally Bitcoin on exchanges at that point, all offline in cold storage. And there, you wanted to at that point be taking a calculated leverage position. Okay? And I was able to, over the next several hours, get Bitcoin onto some exchanges and make those trades, positioning further from the initial spot position. Then, as the halving's occurring over here, and everyone in CTM had that great awareness of what's coming next, waiting and looking for that technical breakout to call the beginning of the Bitcoin bull market, which looked like from the peak connecting the high that occurred in June 2019, and then continuing out, that was the resistance. Once it breakout, retest, and resumed off, that was the technical break and beginning of the bull market. We were positioning in ourselves for several months here on CTM. Many lives were changed at this particular point. Many people currently understanding the bullish case for Bitcoin why they took their positions, and not only that, at this particular point over here, mid-cycle, adding to them. Myself on spot, this whole area from the breakout, the technical breakout, up until May 14th, Bitcoin $50,000 was also, for myself and for many involved, a highly active trading period with all the momentum behind your back. Right? May 14th, after the breakdown of this, what was thought to be the mid-cycle shakeout and the beginning of the parabolic move out of it, the next 150 days, a double wave into liftoff and cycle peak. But then as price came down on that May 13th, something's not right, the model's wrong. So, knew everyone at that point it was time to get neutral. Right? I began dollar cost averaging back in with Bitcoin down 50% mid-cycle from its all-time highs. I didn't think that I was going to add to my spot position since from over here in this area, right? By the way, also during this particular area, accumulating Bitcoin for months and then going ahead on the breakout and then the retest, Bitcoin trading around $10,000, borrowing against that Bitcoin, again, experts only if you understand how to manage your risk. Only if you are an expert, who makes money consistently in the markets and makes serious money, that makes good money, you know what you're doing. Experts only. There's no one that should borrow against their Bitcoin if they don't have the income to pay for that particular loan, the collateral to back it up, and the knowledge and insight to know how to manage their risk. And then again, as we resumed off 13,000, I did the same thing again, taking a leverage position over in this area. Again, taking a leverage position off of this area. Buys as low as 4,200, 4,800, 5,200. And then this point over here, though, stop trading, just holding on to spot, buying more spot, holding on to the loan position, firming those loans up along the way down, and then setting up that trade of leverage again once price broke the most important trend line in crypto. Some beautiful work sharing with that with everyone. What happens next? And we could talk about whether or not we think that in the 2024, the halving of the miners reward is going to be enough of a catalyst to send a supply shock throughout the markets again, that people will be front running once again, right? After that bear market low is put in. That people will be front-running the halving again, and then that supply shock will once again cause a bull market phase in Bitcoin. When people talk about Bitcoin, when they talk about the models breaking, what they're talking about are models breaking to the upside. They're talking about the massive adoption taking place on Bitcoin, number of users alone getting set to cross 1 billion. It should be at 3 billion users around 2028. Perhaps that the having of that miner's reward, and with how much the market has matured, why I believe you'll be able to front run the 2028 halving event itself, that might very well be the last cycle moving forward. And then we move much more toward the linear regression, and I really think that's going to be the top model at that particular point. Right now, let's focus on where we are. Let me get rid of these drawings for 1 second. All right, I want you to see and understand what I'm focused in on. I'm going to go ahead and make this visible, and then I'm going to come down to the daily time frame. We're kind of into real time right now, and just making sure that the data is then picked up. And this is the model that we're currently following. With the bigger picture, what I just showed you, looking at the price of Bitcoin in total, with those, every 210,000 blocks, we call it the 4-year cycle, approximately every 4 years, the halvings of the miners reward. It comes into question whether or not this cycle, the 2012 cycle, with all the ASICs coming online, whether that, caused any type of faster processing of blocks that might have caused that cycle to appear much shorter in the amount of days, right? Are we seeing beyond that? It looks like that blocks have averaged out somewhere around 1,400 days a cycle. Ian has been extraordinarily helpful in doing that work. Before we go forward, and to where we are today, to what we're expecting into the cycle peak, what month we expect that to happen. Why that has changed from September, October into December. Now, I want you to focus on this part over here. This is in April and into the end of April 2021, and Bitcoin had this 30% drawdown. Now, prior to this, in this cycle, the Bitcoin had not had, it had one other 30% drawdown. The thought out there was that the institutions are here, and Bitcoin is no longer going to have any of these drawdowns closer to that 40% that it saw in that 2017 bull run. 2013 bull run, by the way, Bitcoin had a drawdown of 72%. So this current cycle with a 53% drawdown, we're seeing the drawdown is actually an average of the past two cycles. From late March into mid-April, I'm telling everyone, watch out for a shakeout. At this particular time, Bitcoin sees a shakeout that occurs in past cycles. Now, obviously, I don't know what that shakeout is going to look like in real time. We had a 30% drawdown. Being up into this point, that's the biggest drawdown we've had this bull market cycle. Obviously, gathering that could be the lowest price point, and then I'm going to be lining up from previous cycles from this point over in the 2013 bull market, and in this point in the 2017 bull market. They both took, on average, 150 days. Do I expect that is going to happen again? You could see how price is coming out of lining them up from the mid-cycle. Again, we were looking to line them up many different ways at many different times. It's better to look at the full picture I began presenting to you of Bitcoin, and then adding in those 4-year halvings. And you could line up Bitcoin from its halving event and look at it. We did that very often using the halving tracker on Twitter. It was an unknown whether or not was the halving priced in coming into 2020. That discussion took place. We had that discussion, and we were on the right side of the trade, obviously, and continue to be. You could see now price is coming out, and it's actually, I could see why you would line it up like that. That makes a lot of sense. You know what? Let's see from here on in if this continues to play out something resembling the past two cycles. That would be something to have that type of advantage and insight into Bitcoin, especially for then when it would be peaking, and making sure that you have the opportunity to get out possibly at that cycle peak, rather than being a forced hodler, holding another 85% drawdown. Because I would make decisions at the top to protect myself in many different ways if I knew that an 85% drawdown was coming into the asset. Again, there was talk about in this cycle in 2021 that, the super cycles here, Dan held the super cycles here in the coming, we shouldn't see a bear market, 60%. Raoul Pal was consistent. Hey, listen, expect during this bull market a drawdown of up to 50%. I was over and over saying 30% plus drawdowns. I honestly, personally didn't think that we would exceed a 40%. We did. We went down high as 53%. It's hard to get things right like that. But coming out of this, what could have been the mid-cycle low, we're lining up these cycles, and we line them up many different ways. And only that wasn't the price action coming out of here, as that we're seeing now. What the price action, it rolled over. And I said, wait, that's not a V. I'm saying here, this is the beginning of the parabolic move, the double wave into the blow off top. And then as price is not all of a sudden, coming back down, it's that May 13th talking about, hey, something's not right here. This is wrong. This shouldn't be happening. Elon's tweet happened to coincide with this, but it also had to coincide with record inflows coming on to Binance, all the selling taking place, and then record outflows happening the next day. Huge advantage of on-chain analytics to know that type of stuff. May 14th, I'm like, you know what? This is totally unclear. Get neutral. No, I'm not selling my spot Bitcoin. I'm holding my spot Bitcoin to what I believe is cycle peak. But if you've been trading Bitcoin during this bull market phase, you no longer have momentum with you. Things are unclear. I don't know what happens next. And then price dumped. And it dumped all the way down, challenging that 30,000, that 53% drawdown. As it occurs, I put up the most, this is again the technical analysis advantage. Put up the most important trend line in crypto. And I say until price breaks above it, things are unclear. Once it breaks back above there, you then have a good idea that mid-cycle low is in, how to manage your risk really well. The risk will be to the upside, right? It will only be a question before making new all-time highs, and then it's not a question of just making new are we just going to trade into $100,000, do you believe, right? Are you looking at a massive amount of inflows being opened up and coming into Bitcoin this fall and into early winter? Listen, the psychological cycle is gonna play out once again. And you're gonna see, this time it's probably gonna be countries FOMOing after each other, more public companies. MicroStrategy is be sitting on a nice position here, and they just want to leverage this thing out as best they can. There's gonna be massive, all of a sudden there's gonna be no buyer left. There's gonna the next fund is not going to be there quick enough, and you're going to see price, in my opinion, exhibit that blow off top, which is then going to allow for and set up that coming bear market. And then again, we'll be there to play it out together, that bear market, the structure of a bear market, what it looks like, how long it takes, how it plays out, and then just focusing on price and price alone on a very close time frame to make sure that we get it as accurate as possible and the best out there. The work that we did coming out of the low over here as price formed that descending wedge, and then showing everyone the breakout of the wedge, what that looked like, and then talking about how we should see a retest into the most important trend line in crypto. That would be the bears' opportunity if they're gonna make a stand to hold. And it didn't break on the first move up. And then I said, look, I would like to see how that looks again as price makes another attempt at the most important trend line in crypto, and we'll see who's got control. And that's what it looks like. It looks like the bulls have regained the momentum. We looked at the narrative changing along the way when Cathie Wood and ARK Investments set up the dialogue between Elon Musk and Jack Dorsey. At that point, we said, you know what, this is happening in 3 weeks, and I bet that's going to be the narrative, that Bitcoin is ESG approved, that is going to allow Bitcoin to break out of this mid-cycle. That's, it happened to play out like that. Whatever. We were looking at it in advance, just following what's happening on price, and you could see that. Well, it's playing out eerily similar. You might want to pay attention in case it continues. Listen, there's other things that are in common as far as all of these cycles have actually peaked. The last two cycles have peaked into the last day of November, mid-December. You can see the mid-cycle pullback in 2017 during the 2016 cycle occurs and ends in July. So you could see that, why we were paying attention to that, how price is coming out just once again in sync with those previous two cycles. It makes sense at this point then, to really dial in right now and focus in and look at what we believe could be the most likely path. Listen, now what I'm focused in on coming out of that break of what was then the most important trend line in crypto in 2013, right? And then what ensued afterwards with price. And as that occurred over here in the 2017 bull market, and you could see that once it broke that green line, the most important trend line in what was then crypto, in Bitcoin, crypto mid-cycle, you could see the price behavior that repeated afterwards. Is what is getting set up to happen again. This current cycle, it happens to be an average of the previous two in its volatility. The upside, in its volatility to the downside, and in the length that it is consolidated sideways. It's an average of the two. Are we going to see price from the break or that mid-cycle low, or the break of what is the most important trend line? Price, by the way, had off the break over here an 11x return in that 150 days from that low. In the last cycle, price had a 7x from that same place to that cycle peak in the same amount of time. Are we perhaps looking at price putting in another 7x as it did 4 years earlier? That seems likely. It also seems possible that we could see an average of the previous two. So that would be something like a 9x from that particular area. That is what I believe is going to happen. It's possible that price greatly underperforms the last cycle. Now, I think it's unlikely because of the current monetary conditions, the uber easy monetary policy for the coordinated through the central banks throughout the world, and that continued QE purchases of securities between the ECB and the Fed. It is $250 billion monthly. It's just massive. And that might be contributing to why we're seeing gains on par or outpacing, depending on how you measure it, the previous cycle. Now, it's possible over this period that we see price have significantly diminishing returns. When I first, started this journey, I looked at price. I measured the gain from this peak to this peak, and then I measured this gain from this peak to this peak. I saw that price was rising. I then ran the numbers and did the math so that if that were to happen again, and between this peak and this expected peak, we saw that continued diminishing returns. It puts us at $160,000 per Bitcoin. So when I positioned myself in throughout this bull market phase of the 4-year cycle, I've been working it out so that at 140,000 Bitcoin, every goal that I set out to accomplish during this particular period of time, from the research and thought and foresight I put into this investment, this trade, which would be the trade of anyone's lifetime, and still can be, and how I architected it. And that's good, but I'm not going to sell at $140,000. What I'm doing is using my ability to follow these trends that take place, my ability to maneuver them with my macro view, my understanding of money and the monetary system. And then I've created this incredible atmosphere where I work together with some of the greatest minds in the space. And it's just unbelievable. It all happened organically. So I'm grateful for it. And that's why I'm grateful for this conversation today. So what do we think about the on-chain analytics crew are talking about perhaps this is the last cycle? I'm trying to find out what type of data they're looking at on-chain that's giving them that impression. I haven't seen yet anything that I'm looking at, that we're looking at, that would lead me in that direction. Have either of you?
No. I couldn't say anything that I could put my finger on at the moment. I think I've watched everything that I've recently from Willie. Well, I always keep in touch with what Willie's doing, and he hasn't quantified that statement any more than I think the last time I watched. And yeah, it would be nice. It would be nice for him. I think as we move through, he'll expand on it even more. So but I haven't got anything that I can really add at the moment on that.
So the only thing that I'll add to this is that I'm not an expert on blockchain metrics, but I am looking at how the Metcalfe law, right, idea that basically the growth of Bitcoin is tied to the network and the number of users. And so when I saw that measurement, I put it out on Twitter, basically saying here was the growth of Coinbase, right? And I did the CAGR, and over basically 8 years, it was about 130%, which is remarkably similar to the 10-year CAGR of Bitcoin. Right. If you go look at the last few months and you're jumping by maybe 15 million users each time, it does make me wonder if you look on that the S curve that you show, Jordan, quite frequently, right? The adoption curve.
Yep.
That I wonder, are we closer to that 30% zone versus the 50-ish for, I forget what the number is. I think it's a much higher number. Yeah, the 80% growth versus the 33% growth. Because I think to myself, I'm like, well, how many more people are on the internet? And you have total internet users over there, and you have a billion users over there on the right-hand column. And right now we're at 68 million. So that kind of puts us at, if it's just Coinbase, it's near the 100. In fact, I think the comment was on Willie Woo's chart of that was effectively, he thought that 3x the number of users were actually out there. So you're probably talking 120 million users. So yeah, it looks like we're right there, right? But in my head, I just kind of say, well, there's another factor of 10 multiple in there. And is that factor of 10 going to happen this cycle, or is it going to happen next cycle? And I'm not sure, because once you get to a billion, you're in that 33% growth. And I just don't know. My gut tells me that next cycle may be the last cycle before we enter the what I would call super cycle. I still think there'll be ups and downs, right? But it won't be as so violent as it is today. And that's just purely looking at this user count business, because the users drive the whole community, right? And if we're at 68 million, or even 3 times that, 200 million, we're exactly where you are. We're, Raul, this is GMI, right? Where that chart should say 2024. That's the end of the next cycle, correct? Yeah. I believe.
Yeah, that's interesting, because that's where my gut is. We know, or I believe, that this cycle here, well, we're not seeing diminishing returns. I believe that we're going to be seeing returns that are on par or greater than perhaps last cycle. Either which way, going into the cycle peak here, the second half of the bull market, that's completely in play. We'll see what it winds up in a short amount of time, and then it'll be really nice to have that data point moving forward. But I believe, and I like the way you articulated this, using the user growth over here, saying that we're closer maybe to those 1 billion users. And then, from then on in, the growth might be diminishing. That's really where I am instinctively. I still believe that, like, positioning in here before the 2024, front running that halving event and playing that cycle, whether or not that's the last cycle or not, at that point, I do agree with you very clearly. That's when we'll be looking for more signs that perhaps that is going to be, more of a super cycle in definition, maybe lesser bear markets, maybe the bull market is lesser returns, diminishing returns. I like that. I also like a lot of the work Raul has been putting out, not just here talking about Metcalfe's law and Bitcoin, which is technology, and comparing that to the technology adoption curve using the internet. I also like how he took the focus from saying, all right, right now it's a $1 trillion asset. Where do I envision it? I envision that as being $100 trillion, or he says a $200 trillion asset. That Max Kaiser says there's about $400 trillion of money out there Bitcoin's competing for. And Raul's like, I'm going to underestimate. Let's just call it 100 trillion. Obviously, he thinks it's going higher than that. $100 trillion. I mean, that's a 100x from where we are in market cap.
I think that's where my gut is. And in fact, that's why on Twitter, I've been posting, my thesis for a long time now has been, we're going to flip gold, but gold's just the first part. You look at the bond market, that's your safe zone, right? And Raul has said it a long time ago, but I think his thesis is that it's eventually going for bonds. You can't earn anything in bonds now, but if you're older, that's where you have to have your money.
Yeah.
And once we get past this violent growth curve, like maybe in the 2028 timeframe, where would you want to have your store value, right? I can't imagine it would be gold, 10 years from now, because the metaverse will be here, right? The internet will have digitized most of everything. You'll go order, something at a restaurant, and an AI will take your order, and a bot will show up and deliver it, right? Everybody's going to pay with a digital currency. It may be a USDC, but the store of value, I think, is still going to be something like Bitcoin or something similar in the cryptoverse. That's kind of where my view is, but that's a long-term view, but that's kind of where my gut is. And if that's the case, then this right-hand column is almost off, because now we're really talking, in terms of dollar value, I mean, a huge amount of, you look at the finance system, it's multiple, it's multiple trillions, it's just huge number of people, right? So it really just makes me wonder. I'm like, is it underestimating over the long haul? And I think it might be underestimating personally. That's how I'm kind of looking at it. I think that's kind of, I don't know, maybe Ian can reflect on this a bit, because I know he's a huge fan of Cathie Wood's. And I think that's kind of Cathie Wood's argument too, right? That the exponential growth is coming. There's going to be all these exponential technologies. It's the fourth industrial age, right? We're basically going to see the digitization of everything. And the baseline currency for all that's going to be a digital currency. It's not going to be dollar bills or gold or anything like that, right? It's going to be something native to the platform.
Yeah, Jack Dorsey, the internet is going to need have a native currency, and he thinks it's going to be Bitcoin.
I think you're just at the cusp of a massive convergence of S-curve adoptions